Hi everybody, thanks for joining us for Northern Ag TV. Well, recently the Trump administration announced several new trade deals with different countries, including the United Kingdom and China. The new deals included market expansion into the United Kingdom, as well as lowering tariffs on China from 145% down to 10%. I had the opportunity to speak with President and CEO of the U.S. Meat Export Federation, Dan Halstrom, who explained the new trade deal with the United Kingdom.
The announcement last week was substantial in that there is a small duty-free quota of 13,000 metric tons that was established for the U.S. product into the UK. So that aspect of the announcement was very encouraging. However, the announcement could even be more significant. So we're hopeful in that context that there's some more progress that could be made on non-tariff trade access. So if some of this could be simplified by following science, that would really make the opportunity into the UK even that much more attractive for the U.S. beef industry and for the exporters.
Dan Halstrom shared some driving factors behind the increased U.S. beef demand, especially in times like this where prices are record high.
On the cattle herd, we all know that we're at the low end of the supply. But one thing that has not changed, demand's been record-breaking through this whole thing globally. And that is not deterring these global buyers. They're smart buyers. They understand the supply side. And what's driving that is our high-quality beef, the taste, the reputation, the safety. And we're seeing that where markets like a Mexico, a Guatemala, places like the Philippines, they continue to buy even at the higher price. Why? Because they know the quality.
It's been a very impressive year in the cattle markets, and I asked Dan Halstrom what's next for U.S. Meat Export Federation along with the cattle industry.
The future is bright. I'd be really concerned if demand was falling off and we're losing share, but that's not the case. Demand's increasing, and the questions we get from customers around the world is, how soon will the cattle supply rebound so that there's more high-quality beef available? So as I look forward, I think this administration has agriculture's back. It's a little bumpy right now, but they told us up front it would be. And I think for the most part, things are going in the right direction. And we got to just stay the line. Our focus is to go out there and market our taste, our quality, our safety, and the demand will come.
You can hear more from our conversation with Dan Halstrom, the president of the U.S. Meat Export Federation, on our podcast at Northern Ag Network On Demand. And RCAF USA is set to host their 2025 convention and trade show June 17th through the 19th in Deadwood, South Dakota. The convention is expected to draw hundreds of cattle producers, industry professionals, and policy experts from across the nation to give industry updates and policy development strategies. RCAF Marketing Director Jaden Moreland said this year's convention is about equipping producers with the information, tools, and community they need to defend their operations and strengthen their voice. More information on the convention can be found on our website at northernag.net. Stay with us. We'll be right back with the market reports after this.
From the beginning, we've worked closely with farmers. BNSF's ties to the agricultural community go back 175 years. Together, we've innovated to make the U.S. agriculture supply chain one of the most efficient and productive in the world. Our strong relationship powers BNSF still today and helps us move the nation like no one else can. At BNSF, we move the nation for you.
Talking with someone that you know is stressed out, those are difficult things to approach, but if you're good friends with those people, reach out and say, I'm here to talk to you. We can find somewhere to get some assistance. It's hard to get involved, but at the same time, you want to just say, hey, there is help available.
For more tips in dealing with stress in agriculture or for free counseling for egg producers, visit beyondtheweather.com.
Well, last week was a roller coaster ride for the cattle markets. We started the week off with contracts trading $5 to $6 higher, with all feeder cattle contracts above the $300 mark. Then at midpoint, traders decided to partake in a little bit of profit taking, and we saw a couple days of $2 to $3 losses in the markets. Friday afternoon, the contracts were well supported by strong cash cattle prices, and they continued the strength in the box beef, so contracts managed to find near dollar gains to end the session. Live cash bids were seen from $2.18 to $2.20, with dress bids at $3.58. Box beef on Friday afternoon was up $3.18 at $3.53.08. Cash bids this week will be key to see if the markets will hit resistant levels or keep trending higher. Live cattle contracts closed up $1, with feeders 70 cents to $1.70 higher. And auction markets across the region haven't faced any resistance yet, with higher prices for slaughter cows and cow-calf pairs headlining the sales. Belle Fourche Livestock sold cow-calf pairs from $3,000 to $4,500 a pair. Young bred cows were $3,000 to $3,500. Slaughter cows and slaughter bulls sold steady to $2 higher, with bulls topping out at $192. And it was another quiet week of trade for the grain markets. Wheat futures had a decent corrective rally for most of the week, gaining near 10 cents in the contracts, but couldn't hold on to the rally and fell sharply Friday afternoon. Pressuring the wheat markets was the Wheat Quality Council's estimate of Kansas crop, with their wheat yield 3 bushels per acre higher than the USDA's. For soft wheat conditions, rain is expected next week, and fears of wheat scab continue to rise. Winter wheat in May closed up 7 cents at $5.09, but the July contract was down 12 at $5.16. Corn futures also slipped on Friday, as December crop futures are near contract lows. Corn planting progress is projected to be 80% complete by the end of this week, with heavy rains to fall over Corn Belt areas. And soybeans had a strong day of trade last week, but couldn't hold on to the fundamental support on Friday after bean oil was under pressure after rumors of the new budget bill that have an RVO for biofuels lower than expected. U.S. soy markets are also being pressured by South American harvest, which is now 65% complete. Soybean contracts managed to hold the losses to a minimum, with nearby contracts only losing 1 to 2 cents. Well, that's all the time we have for our Northern Ag TV. Thanks for joining us. I'm Colton Young.